In any event, I don't anticipate a lot of activity before the employment situation, which is announced, of course, at 8:30 Eastern Time on Friday, the non-farm payrolls. And tomorrow we do have a Bank of England announcement and an ECB announcement at 7 o'clock and 7:45 Eastern Time, respectively. Other than that, it's tough to say whether the market is going to respond and take on considerable movement prior to the non-farm payrolls event on Friday. In any event, it could happen, may happen, and we definitely need to be aware of it. However, it often can result in quite volatile, choppy, very technically poor price action leading into a non-farm payrolls because liquidity tends to thin out a little bit leading into this well anticipated event, which is certainly, in my opinion, lost its flavor over the years in comparison to the good old days. In any event, let's have a look here at the a couple of charts, and there's one thing that I want to point out that happened on the pound today. But let's look here at this is the Euro US dollar daily chart compressed, and we see here the increase on the average true range. We see the ranges have increased, and this of course is in your manuals. But the ranges have increased somewhat, moving above 100 pips. Average range for the last 5 days. I've got the period of 5 days on here. And Euro has rallied quite a bit here from 118 to above 126. We are holding above this August high here, and we're actually just consolidating above it. So this is our support resistance line, and we're consolidating and holding just above that line. Let's take a better look. I just wanted you to see where this comes from. So we have the August high, and then of course we have, by the way, the high here of the last few days at 26.87 is equivalent to the high here of May. Let's just widen this out a little bit here on the Fibonacci Trader software, and I just want you to take note of this level right here, this 25.50 to 60 area. That will be our key level, and if we have a close or start trading below that level, then that can confirm a retracement deeper. In any event, right now we're just consolidating between this 25.50 and the 26.80 area, awaiting the non-farm payrolls report or whatever other stimulus may decide to move the market. Let's move over here to the British pound. By the way, this is not what my charts look like when I trade. I'm just doing this report off my laptop, and I just kind of have these charts rather smudged together here on the laptop. Let's look here at the daily chart and of the British pound dollar. We see this high here of September the 9th, 05, and that high was 183.85. We did not get that far in the last couple of days. We got as far as 83.64, which that doesn't make sense. I'm sorry. 83.75, that's more like it. Good thing I know my numbers. Anyway, in any event, we approached this level, and I would like to have seen it get nearer to that level, but it didn't, and I missed a trade there. But I want to show you on a smaller time frame what has happened. By the way, these Fibonacci's are looking for a retracement here. So if we do have a retracement, I'm looking at the 8200 area as being an important area at some point in time, although I'm sure there will be trades in between where price is at now and the time that it arrives at 8200. I'm going to take you down here to the I want to take you down to the specific price action of the day, and where is our British pound 5-minute chart? Just to give you some sense of time and space here, we are this is yesterday. This dark black line here, this is yesterday, and this is a resistance point from yesterday, and we move into today. Price moved into the day, opened here at roughly 83.60. It rallied, and it took this just on this small price swing. We moved up, and we retraced to the 38% and moved up to 127% extension. Let me just show you how I did that. So we take our Fibonacci's parameters, which are preset, and we pull them to this high right here. So we see a rally, a retracement to 38%. And let me tell you that I don't normally pull my Fibonacci's on a 5-minute chart. I'm just doing this here today just so you can sort of see how it's done, and that even on the very small time frames that the market can move in a Fibonacci numerical sequence. However, I typically do not use it in practice on a 5-minute chart. I look at the 5-minute chart more in relation to what I'm about to show you now. Price moved from 83.60. It moved all the way up to 83.75, depending on your data feed, but which was the 127% extension. Personally, I wanted it to get up to I'm sorry, it was 84.75. I wanted it to get up to 84.80 and change, preferably 84.90 to 95 area to sell is where I wanted to sell it. It did not get there. It established this price high very early in the session. In fact, before Europe opened, very, very early in Europe, we saw this surge, which was somewhat unusual. It retraced all the way back during Europe, and let's just move forward on this as we watch price. Look at where price stopped. Okay. By the way, this thin line here, this is R1, pivot of R1. Okay. So we're beyond R1, so we are in the sell zone up here. And I want just to take you through price action of the day. Here's our low right here. Look what happened. Okay. We have a low here, and you'll hear me say it time and again. Support and resistance is not rocket science. We're all looking for the holy grail indicators, but look at this, right? And you're going to hear me say this all the time. Now, we bounce at 83. If you want to get specific, we are at a low of 83.54. Let's just move up and let's watch price move up. Oh, hello, 83.54. Okay. And it moves up from 83.54 here up to 83.90, 40 pips. 83.54 here to 8,400. Hello, 50 pips. A little volatility here, and to be honest with you, I don't recall exactly what caused that volatility. But I'm more interested in what's coming up here. Hello, 83.54 again. And 83.54 this time didn't pay 50 pips. It in fact paid in excess of 100 pips. Okay, it didn't pay. What it did is it gave you room to make a trade of 100 pips. Now, here's what I was looking at. As price, look here now, as price started to move above toward this level, this is getting late in the session now. I'm thinking as it gets above this level, I'm thinking, okay, look for a bounce here, but personally I'm thinking, okay, look for a bounce here, but I still want my bounce at 84.90 to 95 is where I wanted my bounce. Therefore, I sat and I watched price come up and knock on the door at 84.75. 84.74, I apologize. Maybe it was 75. No, it was 84.74, depending on your data feed. It knocked on the door, and as it did this and did that, I was disappointed in myself. But there's your nice bounce. Okay, and at this point, I'm thinking it's not going to get to my 84.90, 95 in my time, nor probably at any time soon. Therefore, I sat and watched a very nice trade pass me by, and I knew that there was a possibility of trading here. So let me just tell you the way I was thinking in this scenario. This high here, I figured, well, if I trade this high, if I trade this high right here, um, it is not as favorable from a probability perspective if I am to wait for it to go even higher to this area up here. It's higher probability because the move has been stretched further and price is getting weaker because we're getting late in the session. This is GMT. And so I figured I had higher probability here and I didn't want to risk it down here. And those are the consequences of trading. I missed a trade, and let's look to see what happened since. Price drifts lower. This is what's called our second attempt higher, very weak attempt. And we just watched price start to drift lower. And it is respecting our moving average. Don't just say moving average, Chris. What is that moving average? It's really not important, to be honest with you. Okay, so this is what we call no liquidity in the market. This price action right here, no liquidity in the market. You can tell by these candlesticks, no liquidity. All right, and we have since seen price move. You see this red line right here. This is the central pivot for the day that we're moving into, which is today, the Thursday, the Thursday, what day is it? Thursday the 4th. All right, and price is currently right here at 83.88. I'm simply expecting some consolidation and maybe some volatile price action, but hey, who am I to expect? You actually shouldn't expect anything. You can expect it to go up, down, or sideways, but the way that I'm playing the next couple days is I simply will, in all likelihood, step aside until the non-farm payrolls. That's it for now, traders. I think that's all I wanted to show you. Let me see if there's anything else in here. I don't think so. Let's do our Canadian dollar watch. Continuing to increase. Oil price is getting stronger. Gold is still moving. Precious metals. And keep an eye on uraniums, folks, particularly you Canadians and you Australians. Watch your uraniums. I know it's a political issue over there in Australia, but it's an inevitability and uranium's going to rock. Okay, that's it, folks, and bye for now. Good luck with your trading and be careful out there.